Hi, I'm Stacey Burke from Stacey Burke Trading. Today we're going to be reviewing some 5-minute price action at the beginning of the London session and looking at order flow. Stay tuned, we'll be right back. Hi, I'm Stacey Burke from Stacey Burke Trading. Today we're going to be reviewing 5 or 6 days just to go over some basic order flow at the beginning of the London Open session. So the pink is the end of the Asia session, the yellow is the beginning, roughly approximately around that 2 a.m. Eastern Standard Time, New York. Basically what I look for, we're obviously seeing some downward movement towards the beginning of the London session as we approach the end of Asia. What I always consistently look for is a 2-push pattern. This is a 5-minute chart, but what I'm looking for is some indication of order flow. Now, I'm always looking for pushes. Now, in this particular case, right away we see a range-bound market, but we do see that the market has made a push above the 20-period moving average. This is the only indicator on there that I use, but I'm basically, this will give you some indication of what you can start looking for at the beginning of the London session. Now, in this particular session, we saw a very struggling market to push. There's no clear delineating breakout or trend. So we've seen the first push which struggled, and then it struggled to go down. We see a second push. Now I'm looking at these large white candles. So the initial push, as the market starts to open up, we see some bullish activity. The bears come in quite heavily, but immediately the bulls respond. We see a second push up. The bulls have higher tails and higher lows. And then a third thrust up. So often, you've probably reviewed this before, the market will often try 3 drives, but most consistently you'll always see 2 pushes. And often it may look like a higher high and a higher low, or a higher highs and higher lows, but often a market will always end on a double top or a double bottom, but it's not the textbook double top or double bottom that you're used to, and we'll see that here. So we see a first drive up, a second drive up, the market then changes and we see the weaker bull activity. Now we don't know that until we see that bearish bar follow through. So the bears were able to pile on and drive that down, but immediately we saw the bulls respond. Now as the market comes back up, we see 1 thrust, 2 thrusts, and then 3 thrusts back up. But you need to clearly be looking for these initial patterns. Now this is a bit tricky. Now what I want you to get out of this is that if you can consistently start to read the price action, there's no such thing as noise. When you're looking at these price action bars, there's plenty of information on every single bar, and you need to be aware of what's happening. So pay attention. Let's go to the next day. So again, we see Asia open up and we see the the bears, as Asia's starting to come to an end. The bears have come in. Now we see a bearish drive right off the bat of the London Open. But immediately we see bulls come back into the market and take that out. So we've got a range. We see the high taken out here. We see the low taken out down here. We see consolidation, but we also see the market start to build up inside of that range again. Now what's important about this is that if you're looking to go short with this again, you're actually trading against that profile, because where the bulls or the bears initially came in, if we were to draw a line at the opening price level there, we see support. So where these bears have now come in early into the market, we're potentially looking at, we see the tail here, we see the tail there. We're looking at those bears now having become bulls. But the easiest way to trade that is if you're looking, and the most likely we saw an announcement here, we're looking at 2 legs, 2 legs, 1, 2, consolidation, and then bang. So order flow is always going to be at the beginning of the market. Look for 2 thrusts. Next day. We're not going to cover the US session in this. We'll go over that on a different one. So we see Asia again we've seen a fairly bullish morning. We see that large candle staying sideways in that range. So we've got support into this area. Now we see Order flow come in, bang, 1 thrust, 2 thrusts, 3 thrusts, and they still haven't taken out that high. We want to be looking at this level as potential support that will flip to resistance now. So we scroll over, we see the bears, bang, break out. Okay, so we saw that initial level take place here. Okay, let's see what happens. Okay, bit of resistance into the end of towards the beginning of the US. So at this point, going back to one of our other rules, you'll remember in the past between 2 and 5 a.m. I've often said look for a high for the session. So we've obviously potentially hit that for that trading session. We'll go to the next day. So again, we see the bearish drive, first leg, second leg, pulls back up. As soon as we see this bear bar present, and we've had 2 thrusts down, plus the return bullish spikes, and it hasn't been able to take out those highs, I'm going to be shorting this market. Now straight away, as soon as we go to new lows, every time you go to new lows or new highs, you want to be looking to go to break even, because that is the most vulnerable point for a market, is when it's at a new high or a new low. It will either continue to trend or it will fail and reverse and test the other side. 80% of breakouts fail. When you understand that, no matter what time frame you're on, when you see a breakout bar, high probability that it will return to the previous bar's range. Next candle, or sorry, next day. Okay, so again, big bearish spike, boom. Bullish response, bear follow through, 2, 3. Now as soon as we see that big bullish spike, any bar that's a pullback is a chance to get in long on that trend. Okay, we see that come back up. Bulls that got in up here or over on this side here either would have been stopped out at break even, or they're still in this trade. Now we're into a range bound market. So not all of these trades are going to work, but when you see this market drive down, continue to drive and get weaker, look for that to roll over. Now they're not always going to come back up here, but we'll see what happens on this particular day. And again, we see the bears were able to maintain their selling strength from that original bar. So as soon as it drove back up and failed, again, if you weren't out at break even at this point, or if you had sat in there with a stop still in there, you'd be stopped out. But again, don't be afraid, be flexible, look for that market to turn around. We're seeing the same thing on the bulls. 1, 2, 3 thrusts, and then boom, the market went over. Okay, one more. Next day, Asia, we see Europe open. We see towards the end of Asia, we see a big bullish bar. Second bullish bar, pullback. We're above the moving average. Okay, a nice strong breakout. Okay, if you weren't in up here, you may have looked to trade that back over here. But as soon as we see this bar break, okay, as soon as it takes out that open bar off the bullish bar with the long tail, we know there's stops here. As soon as those stops are hit, that market's going to drive down hard to the other side of the range from Asia. If you were to enter that short from this bar, you'd be wanting to you want to always be looking to enter where you know there's stops placed. So if that market has trapped traders, there's always somebody that needs to be trapped. If there's trapped traders and you know where their stops would be, that's where you're going to see the market accelerate and reverse direction and do it hard. And that's when it'll go to the other side, because that's where there's order flow. I hope you guys are getting something out of this. As I've said, study the price action. Nobody said this would be easy, but it is worth it. Look for the simple patterns. Be flexible, be nimble, constantly be moving your positions when you're at new highs or new lows to break even, and be flexible to look for those 3 thrust patterns to exhaust. Look for where the stops would be placed and for the market to reverse, and reverse quickly. Hopefully you got some value from today's video, traders. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburktrading.com. I create updates on almost a daily basis and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined and may the markets go with you.